All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Welcome in, everybody. Welcome in, Jason Casper. Much love to you, man. It's so good to see you in here. Welcome in. They call me the king, the favorite Fibonacci extinction target streamer. And actually, that's a funny inside joke, Jason, from the collab video I did with you. Someone was saying that I was calling it Fibonacci extinction. So it's a kind of an inside joke we got in the community. The Night Guy, welcome in. R Pink, much love to you, man. Thank you for being here, and thank you for modding and always doing such a good job of it. And Crypto Wanderer 5813, thank you for modding as well. Please do smash the like button on your way in, guys, if you do get any sort of insight into the market from this live stream. Samuel, thank you for being here. Thank you for modding. And Dr. Rex, welcome in from Belgium, man. So, guys, we talked about on Bitcoin that $57,900 target was a very, very key target because our anchored VWAP on Coinbase from the bear market low was there. We had that naked monthly point of control there. And as we were coming down to that target, we saw bullish divergences on the daily time frame on Market Cipher B, and we saw multiple drives of bullish divergence on NAMI with the money flow bullish divergence. So it was that prime setup that I like to look for that more guaranteed position to play out. And I did long around 58,200, took some profit at 63.5, and then I added to it also somewhere in this zone around 61,000. But we came up to resistance, right? It was that point of control of our range of the past 5 months, since 60K, since February, since those 60K lows. We came up to that point of control. Value area low of this range, and it was the point of control of our 5-week long range, our smaller range, local range. We did see a little bit of movement up past it. We created some bear divs on the 1 hour time frame. Those bear divs gave us a bit of a pullback. But we were also looking for this move up from 57K. What was important to analyze is whether this move up was impulsive or a corrective move up. Because if this move up was impulsive, then it's far more likely that we get a corrective move down before continuation to the upside. And it is highly likely that this is an impulse to the upside, you know, multiple 1-2 impulse. You got your 1-2s in here, your 3s, your 3 comes up here, you got your 4-5s coming in, and it looks like it's finished, right? It finished right at a very important volume resistance area. We had a naked daily point of control in there as well. We rejected, and from Monday's highs, we've been looking at this move down as, okay, if this starts out with an impulse, then there is a real chance that we could come take out the lows at $57,700. But if this is a corrective move down, then we have very high probability of continuing up within the larger 5-month long range and coming up to even take out your range highs or push up into the mid to high 70s, all the way up to our 786. Hold on, let me get rid of that. All the way up to our 786 and our pitchfork midline, all the way up into the mid 70s, which is where the value area high of our ranges as well, and a couple anchored VWAPs are coming in there. So yesterday we were looking at, on the live stream yesterday, we were looking at this move down, and I talked to you guys about how this move down, if it was going to be an impulse, if we were going to see that wave 1, wave 2, wave 3, we wanted to reject around that 0.382 to 0.5, and we wanted to make another low. And that could have been just the A wave, an impulse in an A wave, before seeing a retracement in a B wave, and then seeing a C wave down to 60K. But if we did start to break market structure bullishly, if we were able to hold around that trend-based Fibonacci extinction target, right, then we would see a possible move to the upside to take out the highs again. And you can see we did pretty much bounce in that zone between the 1-to-1 and the 1.236. I talked to you guys yesterday about how a third wave often goes down to at least the 1.618, and you see that increase of volume. You don't hold support. And we did hold support right around this anchored VWAP. It was also right around our 786, our local 786 pulled from Monday's low to Monday's high, and around that 886. Now, since then, we've been able to break above. Let me shift to the 4-hour time frame real quick. On the 4-hour time frame, you can see we broke above that anchored VWAP, flipped it to support, and we came up for that market structure break. Now, that market structure break was a key signal to watch for, and we talked about this in yesterday's stream to maybe set an alert there and watch for that market structure break. Because if we start to break market structure bullishly, first off, it hit the more local golden pocket. So in order to analyze whether this is an impulse down, We can pull a local golden pocket from the highs of a wave 3, if this was a wave 3, to the lows. And if you hit that golden pocket, it invalidates a wave 4 corrective move to the upside before seeing more downside. So we hit that golden pocket. So now we know that this is far more probable to be a 3-wave corrective move to the downside, and we are going to see continuation to take out the highs that we created on Monday to come up to our next resistance zone, which we know we have liquidity from Monday, June 22nd. We have our bearish pitchfork there. Let me go ahead and find that bearish pitchfork. We have our bearish pitchfork band coming in right there, which the top of the band is our next resistance of the SFP of the actual range highs. And we have our 786 Fibonacci coming in there. We have a naked weekly point of control and a weekly level at $65,700. Naked weekly point of control, a weekly level coming in at $65,700, which it was front run with this high on Monday, June 22nd. So now that we know or have high conviction, high probability, not guaranteed, high probability that this was a 3-wave move that's corrective move and it's done with, we could look for continuation to the upside. Now, there is still a bearish possibility here where we could drop to $60,000. And that is that double 1-2 impulse. Because when you're looking at Elliott waves, you're looking at an impulsive move being a 5-wave move. A 1, a 2 usually retraces to golden pocket 786. Your third wave pushes up to the 1.618 or higher. Your fourth wave retraces between the 382 and the 0.5 Fibonacci. And then your fifth wave, you can take your retracement here and look for the 1.618 of the fifth wave, right? Now, that's your single impulse in Elliott waves. But there are variations to Elliott wave impulses. And we know that double 1-2 impulses are very common in Bitcoin. And that's where you kind of create that primary 1, primary 2, a secondary 1, which is usually smaller in time and price, and then a secondary 2, and then you see that big push up in a third wave. And then you get, if you have 2 1-2s, you have 2 4-5s at the end. And you kind of get that channel structure, which is that selling exhaustion or buying exhaustion. In this case, it would be buying exhaustion. And you want to see the bear divs coming in here, and that usually gives you the roll over. Now, in a double 1-2 impulse, you want your primary 1 and your primary 2 to be larger in time and price than your secondary 1 and 2. And if there's overlap between the highs of your wave 1 and the lows of your wave 2, you cannot classify that as like 1, 2, 3, 4, 5, like that, unless it's some sort of contracting diagonal. That's a different story. Those are very rare. It's much more probable that you're going to see a double 1-2 impulse. So the only bearish scenario that I can see here, which has low probability already, is this being a primary 1, this being your, primary 2. This would be a secondary 1, and then we would come up to that golden pocket, which we are seeing right now, a small rejection from that golden pocket, as a secondary 2, and then you would want to get that flush down in a 3, and unfortunately, we would probably break our local support, and we probably would come down, like I said yesterday. If we're going to see this double 1-2 impulse to the downside, it is very likely to end up with taking out our lows and potentially even coming down to that $56,000 support below us. And so that is still not been invalidated. That is still a valid scenario, but it is very unlikely in my scenario because your secondary 1 and your secondary 2 are larger in time and price than your primary 1 and your primary 2. Also, we have now hit that golden pocket. If you pull a golden pocket from the highs of wave 3 to the lows of wave 3, we have hit that golden pocket, therefore invalidating a fourth wave, invalidating this as being a 3-wave corrective move in a 4 before seeing a 5. So it's looking pretty good, guys. Now, this range could extend and we could see something like a 3-wave move down in a W. We could get some sort of 3-wave move up in an X, and then another 3-wave move down in a Y, where we just extend this corrective range a little bit longer, which, because we are going into the weekend, and it is a possibility, right? We know we go sideways with low volume in weekends. That is something I'm going to be watching for. But in terms of our smaller local price action, because we saw that bullish market structure break, I am looking for continuation to the upside, and I'm looking to come up to our next resistance area, being that 786 Fibonacci, and grabbing some liquidity. We talked about that liquidity that is above those highs, and quite honestly, we could see this extend much, much more aggressive. Now, on the higher time frames, remember, we finished our 5-wave impulse to the downside from $82,500. We had all of this being a wave 1, a wave 2, wave 3, wave 4, wave 5. And for the past weeks, I was letting you guys know I'm looking for the swing long positions down here, especially if we have the bullish confirmations based off of the Elliott wave count, the larger Elliott wave count from 83,000, but also an Elliott wave count from 67.2. We were looking for the 5-wave move down to be completed. A wave 1, a wave 2, a wave 3, a wave 4, and then we finally made that one low. Whereas a lot of people were longing the wave 3 lows, we were looking for that actual touch of the naked weekly point of control, naked monthly point of control, anchored VWAP, and the pitchfork midline with bullish divergences on the chart. So we've gotten that. And if we zoom out to the weekly time frame, we have a few days left until our weekly candle closes. We saw a nice big bullish engulfing candle last week, a big green bullish engulfing candle, which pretty much confirmed some weekly bull dips. Not completely. I would say that if this week candle closes green, this will absolutely confirm. And we can also look at that money flow starting to bottom out here. That's what we want to see. Now, the concern I had with that is NAMI. And we know that NAMI is much quicker than Market Cipher B in confirming divergences and in confirming the money flow. And the one concern I had here with this being a more of a macro bottom on the Bitcoin chart is we did not have the weekly bull divs on NAMI, and we didn't even have the regional weekly bull divs on NAMI. Money flow is coming back up into the green. That is good to see. And as long as that can sustain, we could see that larger rally up at least to take 67.3 out. The other scenario that we've been talking about on this channel for quite some time is accumulation forming at this very, very important support level. And Jason, I don't know if you're still here, but I have talked about these high time frame pitchforks. So first off, this is our bear market pitchfork. It's pulled from our important bear market highs, all-time highs, lows, and highs. And you can see the reason why I was looking to short $82,300 to $82,500 because it was our logarithmic golden pocket in confluence with the midline of that pitchfork. And we also bounced from the bottom of the pitchfork here. We flipped it to support on lower time frames. You can see in here on lower time frames. Let me zoom into the daily time frame. On the daily time frame, you can see we broke above it, flipped it to support. The second we flipped it to support here, I was looking for the move up to the purple box. We were able to do that. We were also looking at this entire range from 60K to 83K being a corrective zigzag move before seeing an impulse to the downside. Now, we're at very, very key support. We're at the bottom of our bearish pitchfork. You can see the last time we hit the bottom of the bearish pitchfork, we saw a nice bounce, and we even were able to make new kind of medium term or high time frame highs. We are coming down to the bottom of our bearish pitchfork. It is also the midline of our pitchfork from the last cycle, from our last bull cycle, you know, that midsummer low, 2021 low, up to your 69K all-time high, down to your 15.5K low. And then we also have our multi-cycle pitchfork. So let me go on to my Binance chart. And on the Binance chart, this pitchfork is the pitchfork that I have been watching for years. I have had this pitchfork on my chart for years. Actually, Jason, I remember showing you this pitchfork in a private video that I sent you. I think it was in 2022 or 2023. But this pitchfork has been super, super highly respected. And hold on, guys. Let me just get rid of these real quick. Clean this chart up. And, you know, it has guided us in major swing positions throughout the entire bull market. We did see that distribution at the channel or the pitchfork midline, distribution at the all-time highs. We have now distributed all the way down to the bottom of that pitchfork. On the weekly time frame, I've been telling you guys for the past 2 weeks, it's most important to hold and close the weekly candle above that pitchfork support level with some bull divs on the chart. We have those bull divs on the chart. We have that selling exhaustion. Another thing that I talk to you guys about a lot on my channel is about channels and selling exhaustion and buying exhaustion. So when we throw on that parallel channel at the bottom, what I like to see and what shows me that the market is starting to get some selling exhaustion, in this case on the dump, you see your aggressive move to the downside, and then you start to get that choppy overlap inside of a parallel channel. This is a sign of selling exhaustion. This is a sign that the big aggressive dump is over and we're starting to consolidate and accumulate in here. So what we want to see with accumulation is you want to kind of see that inverse head and shoulders, or a model 2 distribution, model 1 distribution. This high here at 59,000 is a tap 1. This kind of double low in here is a tap 2. And if we break up here to the top of the channel and reject, or even take out the highs of the range and reject, we can look for that move down to the midline and to back test that pitchfork as a tap 3 or a right shoulder, right? You would get your left shoulder, head, right shoulder. This here is a bottoming reversal pattern, and it is accumulation. As far as Wyckoff theory goes, that is your Wyckoff accumulation. Now, once we start to have that play out and you break out of this channel, you often see a back test and continuation, aggressive continuation. And this is where we could bust up into the high 70s, mid to high 70s, right? Where our golden pocket is at 74,000, or up into like 77,000, where we do have our 786 Fibonacci, and we have a couple of other key pitchfork levels of these different pitchforks coming up there. You can see this zone right in here. We have our 786 Fibonacci. We have a value area high. We have our pitchfork midline. We also, I believe, our anchored VWAP should be coming down into that zone right as we're breaking up there. We would have to kind of flip this, you know, come down, double bottom, flip this, and then come up into that zone. Now, that is what overall I'm looking for if Bitcoin is going to see a macro bottom as far as price goes. We know time-wise, during the 4-year cycle, we still have till, you know, September, October, November. So we can expect this accumulation range to take some time in here, maybe come up, sweep 67.3, reject from your pitchfork midline. When you reject from that, or your pitchfork upper band, your upper limit of the lower band, excuse me, we can expect that retracement down to golden pocket 786. And then that would be your smaller, I would say, daily accumulation. And if we can get that daily accumulation to break out, backtest, and see expansion, then we could come up into the high 70s, mid to high 70s. If we reject from the mid to high 70s, we could see a big retracement back down to the backtest, that pitchfork band. And then we could see the breakout of our much larger expansion, the end of the bear market, the start of a new bull market. And that would give you, on the weekly time frame, your accumulation. You have your tap 1 at $60,000. All of this smaller accumulation range would be your tap 2 around the mid 50s to high 50s. And then we could get a tap 3 coming in sometime in September, October, November. And then we could start the new bull market. As far as the technicals go on the chart, we do have the technical signs of a possible major reversal here. We have the weekly bull divs, we have the daily bull divs, we have the daily money flow bull divs. Now, I don't like what I'm seeing today on Market Cipher B as far as that daily money flow goes. You can see our daily money flow on Market Cipher B is starting to come out again here. I talk about this a lot on my channel, but with Market Cipher B in particular, bearish money flow will almost always overpower a single drive of bull divs or a single drive of bear divs, right? And so that's why it's really important to see this money flow starting to bottom out and starting to curve to the upside. The other thing that we did see here was NAMI printed a hidden bearish divergence on the daily time frame. The last time we printed that hidden bearish divergence on the daily time frame was our highs at 67.3, and then we dumped down to make new lows. So let's go back to that channel, and I told you guys we could look for 2 forms of accumulation here. We could look for the Model 2 accumulation, right, where we see a move down and you make a higher low for your left shoulder, or your right shoulder, excuse me. You get that like left shoulder, head, right shoulder. Or what we see a lot in bear markets and just in general is a Model 1 accumulation. And a Model 1 accumulation is more of that channel, that parallel channel. Let me go ahead and hide our pitchforks here so we don't get confused. We see more of that parallel channel where you get that selling exhaustion that's coming in, but you do end up rejecting from the top of the channel and you get another new low. And it's kind of like, you could call it like a 3 drives pattern. If you have 3 SFPs, you know, that's, if it does it with 3 SFPs, that's called the 3 drives pattern. Or if in this case, you would be looking at this as a Model 1 accumulation where you have your tap 1 here, your tap 2 is always deeper or higher in a bearish scenario. In distribution, it's always higher, but your tap 2 is always going to be lower than your tap 1. And then in a Model 1, your tap 3 is lower instead of higher, like a Model 2. So this is the other scenario that I'm looking at. And we do know that at $56,000, we have a major value area low. And we can talk about that for just a minute. I know this is going to be a review for some of you that have been on my channel and watching daily, watching the streams, watching the videos daily. But you can see that value area low is coming in at $56,000 of the 2-year long range. Now, why am I pulling this volume profile like this? This has to do with market auction theory, and it has to do really with volume profiles, right? And we know that the two most important things in the market are volume and liquidity. Liquidity first, volume second, right? So that's what moves the market. So we know that in 2024, the fair value for Bitcoin was within this balance zone, this range of balance. Between 70,000 being overvalued, your value area high was coming in around 70. Your point of control, which was considered your fair value, was around 63 or 64, and you were considered undervalued around $60,000. And that is also why we bounced at $60,000 from that low in February so strongly. It was a perfect bounce of our previous range value area low. Because the market tries to find balance for an asset. It tries to find fair value. So in 2024, the fair value was between 70 and 60,000. After Trump wins the election, after some bullish catalysts happen in the crypto market, we pump up into new levels of price discovery. By the way, if you guys want to see what a perfect double 1-2 impulse looks like, this is it right here. Wave 1, wave 2, wave 1, wave 2. There's overlap between the highs here and the lows here, so you can't count that as a contracting diagonal. But you can see how your primary 1 and your primary 2 are longer in time and price than your secondary 1 and your secondary 2. And then you get the big third wave. And then you get some 4 5s coming in, right? 4 5 and then 4 5s in here coming in. And you kind of get that bearish divergence that gives you the dump. But going back to market auction theory, after Trump wins the election, we push up into new levels of price discovery. And for all of 2025, we formed a new fair value for Bitcoin in price discovery. And that was this range here, where the value area high was around 116,000. Let me just pull that volume profile real quick. Value area high was around 110,000. Our fair value was around 97,000, and it was considered undervalued at 86,000. But you can see, after bouncing from the bottom of that range, undervalued, when we got down to undervalued, we see some buyers step in, but they sold off at fair value, and then we broke through. So anytime you start to lose a range like this with a high volume push to the downside, what the market is saying is we're no longer pricing in the fair value at 2025 price levels. We're now going to go back to revisit 2024's price levels and see if it is proper for our fair value for Bitcoin. So we ranged inside for a couple months. We back tested the value area low of our range, and it was around the value area low, right? Between your range lows and your value area low. We back tested that. We rejected. And then we come back down and we're back inside of this range here. So now once you see that you find reacceptance within a previous range, the market is now repricing Bitcoin back to 2024 levels. We can combine the two ranges. And that is that 2-year long range that I just showed you guys. Taking this range, and our new smaller range down here, you combined them and you have this volume profile. Where did we reject, guys? At our first high within this, after this aggressive dump to the downside, we rejected on the bearish back test of the value or of the point of control. So that should tell you that the market is still selling off at fair value for the past 2 years. Because we saw that bearish back test and rejection there, as soon as we saw this, guys, I was telling you, I am expecting to take out our $59,000 lows. And we want to see it in an impulsive move, right? Because you wanted to see that 5-wave move down. And we did. 1, 2, 3, 4, 5. We saw that impulse down. That was our 5th wave. If you guys remember our Elliott wave count that we had on the chart, we were looking for that 5-wave move down. And we got it. And we got the bull divs. We got the long position that we have been hunting for weeks. Now, the opportunity we have here after bouncing from the lows, creating the bullish divergences, we have the opportunity to break or pretty much come back to test that POC again. And if we do reject again on another test of the POC or close to the POC, it could be this first purple box of resistance, could be the second one. If we reject, we would expect to come down and visit the value area low. And the value area low, by the time we get down there, because it's not going to just be a straight dump like this, it's going to be waves, right? Ebbs and flows in the market. So by the time we get down there, That value area low is going to be in confluence with the bottom of the channel. And then we'll just re-enter the swing long, right? Especially if we have another drive of bull divs between this low, and our new low that's being made at $56,000. We're seeing the selling exhaustion chop within the channel. If we have another drive of bull divs on the chart, and if we have multiple drives more of bull div on NAMI, I will be taking massive swing longs from here. You know, I'm already in the swing long from $58,200 down right in this zone in here, but I would like to keep that going a lot higher, right? Maybe even up to 77,000 or higher. If we get stopped out because we roll over here, I'll look for the short here. If we have confirmations and bear divs, and I will look to take profit at $56,000, and then I'll just look to enter a new swing long here. So that is the way we can look at this, and we can just trade the market. And remember, trade the range that's in front of you. Trade the range until it breaks. We have a couple different ranges on our chart right now. We have our range that goes back to the beginning of June, you know, about 5 weeks now. And we have our 4 or 5 month long range from February. And what we're looking at right now is the smaller range. We're looking at that possible Model 2 accumulation. Breakout, take the range highs. Maybe we're going to break out and continue up. Or maybe after taking out the range highs, we're going to see a move down to golden pocket or even a new low and then go up. We'll just play the range. And that's what's great about being a trader here, guys, is we have our overall bias, but we trade what's in front of us, right? You hedge against yourself. You take shorts when you're bullish. You take longs when you're bearish. You do both. You want to open what Jason Casper termed the schlong position, the schlongs, protecting yourself, always being in that good risk management, good position, no matter what happens in the market. So welcome in, guys. I'm sorry that was a little bit long-winded there. Dylan Wadia, much love to you, man. Thank you for being here. Yeshwant, thank you for tuning in from India, as always. I hope you're having a good day. Eric, yo, man, much love to you. And ZMX, thank you for being here. Thank you for modding. Wayne Rosi, evening, hope you well. Any confluence for a short at the golden pocket at 63.6? Well, we came up and we hit that golden pocket just a little bit ago. Now, we did have some very small time frame bear divs on the chart, but I don't know if you caught the beginning of the stream. I am really, because this now is more likely to be a confirmed 3-wave corrective move down, it's actually likely that we take out our highs from Monday. So there is still a bearish scenario where we do reject from that golden pocket and then come down to 60K or lower. And then you would kind of be seeing, you know, a longer corrective move. But in my opinion, it is likely that we could continue up. You know, we would have to be looking at building some 1-2s in here. 1-2s, 1-2s, and then we would want to see this continue to push up through that golden pocket, probably at least to take out Monday's highs. And then we would see those 4s and those 5s and those 4s and those 5s coming up into our resistance box and the top of the channel. But you can see the midline of the channel held very, very nicely here. We are getting a very nice reaction from the midline of the channel. We're also flipping our anchored VWAP. And remember, guys, anchored VWAP is a volume-based trend support, right? We know that volume is the most important thing to look at in the market, volume and liquidity. So volume support levels supersede other support levels. And we pull our anchored VWAP from the low from our swing low at $57,700. And if you're in a bullish trend and you come down and you test that anchored VWAP and it holds as support, you expect to make new highs. You expect to continue that bullish trend in this case. We make new highs, we continue bullish market structure, we come down, we hit it again, it holds again, you make new highs. Now, I know that this time we are seeing a little bit of chop in and around that anchored VWAP, but overall it's holding as support. Remember, this was kind of a zone in here. This was a zone of support that we had, and it's holding overall. And so if we can hold this back test again of your volume-based trend support, you expect to make new highs. You expect to overall continue the bullish structure here. The one concern that I have, is that this impulse does look completed. And after any impulse completes, you look for a corrective move down. Now, if we take let me just zoom out to the 4-hour to make this easier. In Elliott waves, after an impulse finishes, and let's say this is either an A wave or a 1, right? So let me explain this in terms of Elliott waves. on the higher time frames, we could be seeing a zigzag pattern to the upside, an ABC to the upside, where after the ABC finishes, you dump and you make new lows, or we're looking for an impulse to the upside. So this would be, instead of an A wave, you're looking for a wave 1. Instead of this being a B wave, you're looking for a wave 2. And the difference in the scenarios is your third wave is going to push you much, much higher to the 1.618 or higher. And then you're going to see a small pullback for 4 and then a 5. You're going to continue in the push up. But either way, locally, because this was an impulse here, yes, we're looking for a corrective move that could take a couple of weeks or a week, but then we're looking for a higher low before making another higher high. And we know the best level to look for that is that 60K support level, which is the value area low of the range. We have the naked weekly point of control there, and we have the golden pocket there. So if we turn on that local range, let's see where we at here. Get rid of that. There we go. You can see the value area low of our local ranges here. We have our golden pocket there. If you pull a golden pocket from 57.7 up to our highs at 64.4. And then more importantly here, let's talk in terms of volume profiles. We rejected the value area high on Monday. And if you guys remember on Tuesday's live stream, I told you guys, if we close Tuesday's candle below the POC, there is a real chance that we can come down to the value area low. We are seeing that bounce in that internal support level that we talked about also on Tuesday. And now the important thing is, if we reject this POC again, I would expect a rotation down to value area low. And we can pull that golden pocket from your highs to your lows that we made today, or yesterday. You can see golden pocket is right around the POC. So this would be the area where we would expect that rejection. Let me see if we have a naked daily point of control in here. No naked dailies. We do have a daily level though. We have a daily level around 64K. So a little bit higher. It's going to be closer to that 786 Fibonacci. You can see it's right on top of that 786 Fibonacci. So that's kind of our zone. If we're going to reject, and if we get up here, guys, what we would still invalidate this impulse, right? 1, 2, 3, 4, 5. This single impulse has been invalidated now for sure. We still have two bearish scenarios, or two semi-bearish scenarios. The other bearish scenario I talked about earlier in the stream, where it's a double 1-2 impulse, a wave 1, wave 2, wave 1, wave 2, and then you get the dump 3, 4, 5, 4, 5, right? Something like that. But it's less likely based off your secondary 1 and 2 being longer in time and price than your primary 1, 2. The other scenario is a larger sideways WXY correction, which a WXY correction is just a series of 3-wave moves. You have a 3-wave move here. We would want to kind of see some sort of 3-wave move in here, and then you would get another 3-wave move down. And that 3-wave move down could be an A, B, C to come all the way down to 60K. So there is still a valid short from golden pocket 786 zone to come down to 60K. And in terms of our volume profile trading, because we rejected the value area high and we've lost the POC, yes, if we backtest this POC bearishly again right now and we reject, I would expect to move down to 60K. So I am looking for shorts. I have not taken a short yet. I know that we hit this golden pocket, but to me, I mean, let's look at the oscillators on the 1 hour time frame. Do we have some bull divs on NAMI? Yes, we do. We have bull divs on NAMI as we're hitting that golden pocket. Market Cipher does not, and Market Cipher money flow looks pretty dang good here. Also, NAMI, I mean, the money flow was looking decent. It's starting to roll over now. It's a bit quicker than Market Cipher. But let's zoom down into the 15-minute time frame. On the 15-minute time frame, we are seeing some bull divs as we're coming up there. Higher highs, lower highs in here. But NAMI, locally, you can see these drives of bear div in here on the 15-minute gave us this big push down here yesterday. But we're not seeing local bear divs on NAMI right now. And the money flow actually looks really good right now on NAMI. We also had very, very slight, actually, no, those weren't slight. That's a trigger wave there because it's not a lower low. To me, I didn't see enough confirmation yet to take the short from the golden pocket. And in my case, I would want to hit the POC too. So I'd want to see a little bit of a break up through that golden pocket, hit the POC, and then once we start to lose the golden pocket, that's going to give you a much better confirmation to enter the short, right? So I would wait until we reject from the POC. As soon as we start to lose the golden pocket, You could put your stop above that POC rejection. You would be targeting first, my first TP would probably be the lows from yesterday. And then my second TP would be down at 60K, you know, that $60,100 to $60,400 support level, which we do have a golden pocket in here. We have value area low, naked weekly point of control. So, and that's a really good risk to reward overall. And you could take it with much more confidence, much more confirmation if you wait for the rejection from the POC and then start to lose the golden pocket. Right now, we barely tapped the 618 and we're only seeing a small pullback. So yes, it's a valid short because we did have bear divs as we were coming up there, but to me, it wasn't enough. It's not enough to enter. I would rather actually come up and hit the POC and see that back test. Because also, if we zoom out here on the, let's go to the 4-hour time frame. Since we lost the POC on Tuesday, was that Tuesday that we lost it? Yeah, on Tuesday, we lost the POC. We have not bearishly back tested it yet. So oftentimes after bouncing from a local support, you'll come up for the bearish backtest. You actually want to hit that level for the bearish backtest though, and we haven't hit that level yet. So if we do hit that level and reject, then we could look for the short and the move down to 60K. Right now, I haven't seen that. We can also look at, and we looked at this a little bit yesterday, but if we go back to that 1-hour chart, we kind of have this upper range, like with this impulse from 57.7. Hold on, let me turn off these daily levels, get them out of here. We have the impulse here from 57.7, and you can see it was pretty aggressive up in this move here, and then we kind of start going sideways in here. So we can pull a smaller local volume profile of that sideways range. So if we take that volume profile, we are above the value area low and the POC. We flipped it to support. Actually, you can see here, let me hide our other one so we don't get confused here. You can see we bounced from the channel midline. We came up, we bearishly backtested the value area low. We saw a small rejection, but we still made a higher low, excuse me. But then we broke back up inside of our volume profile with a nice volume increase. If you look at the volume here, we broke back up with a nice, yeah, we were increasing locally. I was looking on lower time frames. I think on the 15-minute, you did see a nice volume increase in here. And after breaking back inside that volume profile, we back tested the value area low, which also happened to be the flip of the VWAP to support. And remember, your VWAP is your volume-based trend support on a daily time frame, kind of for that intraday scalp trading. And we bounced here. So the second we bounced from the value area low, it was high probability that we were going to take out this high that occurred last night for me. And we did today. We just took it out today. We're coming up to that golden pocket. But because we've now found reacceptance back with inside this volume profile, there's a real chance we could make it up to value area high. And remember, the value area high is also where that daily level is and that 786 is, the next zone. So we have two zones locally to look for shorts. Locally. We have two zones to look for shorts. We have the POC, which, by the way, I don't know, Jason, if you're still here, the POC on Coinbase for that month-long range, for that 5-week-long range, is at 63.5. On Bybit, it's at 62.5. So it's a whole $1,000 difference. But this would be our first zone of resistance. We're coming up into it right now. We do see some bear divs right now. Our second zone of resistance that I would possibly look for a short is your value area high of your local range, your 786, and your daily level. And then I don't remember, do we have a naked daily up there or a naked weekly up there? Okay, no naked dailies. No naked weeklies. This weekly, this is our weekly point of control, but it's not confirmed yet because we're only on Thursday. So we have a few more days for it to confirm, but it's still your volume resistance, right? This zone. So yeah, if you are looking for the short, guys, and if we're looking for that move down to 60K, for me, there's only two opportunities, two areas I'm looking. First purple box, second purple box, right? That's it. Now, we've just started to touch the first purple box, but I do not like the confirmation we're seeing here yet. We've also flipped the value area low and the VWAP to support, meaning we could move up to value area high. And a lot of people are going to be looking to short this. We might break above it just to hit the value area high and then lose it and then see the big impulse to the downside, right? Another thing, though, because this was a three-wave, more probable now to be a corrective move, we are likely to even come up and take out your highs and come up to the next purple box of resistance on the medium time frames at 65.5 or 65.2 to 65.7. All right, let me jump in the chat here, see what you guys are saying. Welcome in, everybody. Thank you so much for being here. Okay, last bear market, people were waiting for lower. Many will wait for lower this cycle. Yeah, Nature Joko, you're so right. And I gotta admit, I was one of those too. I was waiting for 12,000, I think, and we came to 15.5, but I was still buying under 20, you know. I was waiting for lower, but you're still buying. Like, general rule of thumb, like Warren Buffett says, if in traditional markets, if an asset is 20% off its all-time high, that is time when you can start dollar cost averaging for like long-term spot like holdings, right? Well, we know that crypto is at least twice as volatile as the traditional markets. So my general rule of thumb is when Bitcoin's 50% off its all-time high, 40 to 50% off its all-time high, that's when I'm starting to look to accumulate for long-term spot. And I have, you know, I told you guys as soon I had a spot limit order sitting at $59,900 right on top of that naked monthly point of control, literally right on top of it at 57.9. And I told you guys that for months leading up to it, actually. Even when we were in February and at $60,000, I told you guys I expect one more macro low to be made where we hit the anchored VWAP. Hold on, let me just zoom out here. Told you guys that back in February when we front ran this anchored VWAP and we front ran the naked monthly point of control, I told you guys I think we're going to see one more low. And I was very convicted that this range, the entire time I was very convicted that this was going to be a three-wave move before seeing an impulse and a dump to make new lows. You guys can go back and look at my streams, my videos, my analysis. I was very, very convicted. And we saw, once again, a lot of people longing right up into the trap. That long was used for fuel to squeeze us down. And we finally hit the anchored VWAP from the bear market. That is huge to me, guys. Volume-based trend support for an entire bull market. We finally hit it. Okay, let me see. Tom, Select, thank you for the amazing detailed technical analysis. We are learning so much. Well, you're welcome, Tom. I appreciate the kind comment, and I'm glad you're learning, man. You know, there's a lot of different styles I use. I use Wyckoff, I use volume profiles, I use channels pitchforks, I use Fibonacci, I use Elliott waves. And I kind of took in and combined different aspects of each, you know, strategy and teaching to make it my own. And what I would say is find something that works for you, right? Find something that works for you that's repeatable. The most important thing, though, no matter what strategy you're using, is risk management. Risk management is key. And I can show you here on your risk to reward ratio, you can actually lose 70% of your trades and only win 30%. But as long as you're taking a risk to reward ratio of a 1 to 3, risking $1 to make $3, you can be profitable still losing 70% of your trades. So that's why risk management is super, super important. And actually, I don't know if Jason is still in here. Jason Casper, a mentor of mine, a teacher of mine, a friend of mine. Jason just had a live stream a couple weeks ago, I think it was, where he showed over the past 3 months, he's only won 46% of his trades. But he's up hundreds of thousands of dollars on his account because his risk management is so spot on. So it's about risk management. It doesn't matter what strategy you're using. Find a strategy that works for you and then get the risk management and the trading psychology down. Trading psychology and risk management are key, guys. Yeah, but thank you for the comment, Tom. Time Attack, much love to you, man. We're doing good here today. I hope you're doing good as well. Thank you for being here and thank you for modding. Okay, Jose, hola to you as well. Thank you for being here. Alex Becco, much love. Made it to the stream today, guys. Well, thank you, Alex, for making it to the stream. Hope you're having a good day as well. I want to zoom in here on the 15-minute because I want to see if Bitcoin is going to start to see that rejection from our golden pocket. So over the weekend, guys, and I don't expect, we still do have tomorrow, Friday, but I'm expecting that if we're going to reject from one of these local purple boxes that I just laid out during this stream, we are probably going to dump to $60,000, you know, 60.4 to 60K. And if we look at our liquidation heat map, we still do have that liquidity underneath. Let me go to our 1 week chart. We still do have all that liquidity that is resting down, you know, really underneath Monday's lows, but the liquidity pool goes down to about 60K, 60,500, 60,400. So there is still a possibility of dumping to 60K. Now, overall, I'm expecting a higher low to be made, though. I'm expecting a higher low to be made and then to make another higher high and potentially take out 67.3. And the reason why I have that bias is because we had daily bull divs at macro support, and we have potential weekly bull divs at macro support. That anchored VWAP from the bear market lows. Okay, guys, I do want to take a second really quickly here to shout out the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% discounts on trading fees if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses. If you trade the USDT contracts on the futures markets, not just Bitcoin, the altcoins as well, you can earn up to $8,100 extra dollars that will go into your account. In my opinion, that is a great incentive because you're going to be making those trades on an exchange anyway. So it's extra value you can add to your account. They're also offering some of the best initial deposit bonuses in the entire industry. If you deposit $100, they'll give you a 50% deposit bonus on that, which is over double what most exchanges will give you on $100. They're giving you 20% deposit bonus up to a $1,000 deposit, and they're giving you a 10% deposit bonus up to a $20,000 deposit, which is double what most exchanges will give you. I've also partnered with BYDFI to create that Telegram community. In that Telegram community, I keep you guys updated throughout the day. When I'm not streaming or making videos, I let you guys know when I'm entering a trade, taking profits on trades. I let you guys know on the altcoin alerts that we set during these live streams. We'll set alerts, and as that alert goes off, I'll pop into the Telegram and let you guys know if I'm taking the trade or not, or what I'm seeing when that alert goes off. If you're interested in joining the Telegram, it's a private community, but it is free. All you have to do to sign up and to get in is join BYDFI using my affiliate link in the description, and then make a minimum deposit of $100 or more. The money you deposit, you're not paying it to BYDFI, you're not paying it to me, it's your money. You're just depositing it on the exchange in hopes that you'll try out the exchange and like it and stick with it. But you can minimum deposit of $100. Once you've done that, you click the Telegram link in the description of this video, and in that Telegram verify channel, you're gonna type in /verify and then your BYDFI user ID, which is probably gonna be a string of letters and numbers for you guys, but /verify in your user ID, and it will get you into the Telegram. I have a few other exchange partners as well. I have Blowfin is another non-KYC exchange. They're offering some discounts on trading fees, some initial deposit bonuses. I have two KYC exchanges being MEXC and Bybit. Their links are in the description there. Those are a way to support the channel. You guys using any of these affiliate links is a way to support the channel, a way to say thank you. So I appreciate it if you do that. You can also just hit the like button, subscribe, share the videos, all that good stuff. And then I have one last partner of the channel, that's NAMI Trading, which is this momentum and money flow indicator you see here on the bottom of your screen. And I use this for confirmations to enter and exit trades. Since I've been using NAMI for confirmation, not just blindly shorting at resistance or longing at support, but I like to see confirmation. So since I've been using NAMI for confirmation, it has gotten me into trades that are more likely to play out and kept me out of the trades that are less likely to play out. And it has increased my profit margins quite a bit. I have partnered with NAMI to get you guys 50% off. So if you click the affiliate link in the description below, and when you're checking out on the website, use discount code DIVINE50 in that discount code promotion box, and you guys can get 50% off NAMI. All right, let me continue in the chat. No, welcome in, man. No worries about being late. Glad to see you here as always. R Pink, can there be more than a double 1-2? If so, is it more rare? Yes, R Pink, to answer your question, short answer is yes, there is. We see triple 1-2s a lot. Actually, we see, you can call them stacked 1-2s or nested 1-2s, but we see it go like this in a channel a lot, and everyone thinks that parallel channel is likely to break down because a majority of the time, I'd say at least 67% of the time, 2/3 of the time, they do break down. But you see all these nested 1-2s or stacked 1-2s, and then you get that big breakout in a 3, and then you would look for that many 4-5s. I have seen it one time where there was like 4 or 5 1-2s. A lot more rare. Our Pink, sometimes, especially with the altcoins, we'll see triple 1-2s a lot, like a 1-2, 1-2, 1-2, and then you get that big break, and then you get your 4-5s, and your 4-5s tend to be a little bit flatter towards the top. Like these 1-2s will kind of compress like a contracting diagonal. You get that big explosion, and then you get that parallel channel or a rising wedge towards the end, right? But yes, absolutely, man. We see it. We do see it. The most common for me with Bitcoin in particular, Bitcoin really likes double 1-2 impulses, guys. Like it's crazy how much Bitcoin we see double 1-2 impulses on Bitcoin. Okay, John Boomdock Saint, welcome in, my friend. Much love to you. Justin trades, would you consider a short from this golden pocket with bear divs? Yes, I am. I'm considering a short, but we hit the golden pocket. We hit the 618, and I have not shorted yet. We hit it just barely, and I didn't like the lack of divs we were seeing on NAMI on the 15-minute, because you can see from our highs, we were not seeing bear divs there. Now, on Market Cipher, from the high from overnight to the high we just made, we're seeing bear divs, and we're also seeing bear divs on NAMI as well. So we are seeing a little bit of a confirmation to enter a short. But like I said just about 10 or 15 minutes ago, I would like to bust through the golden pocket just barely to hit the POC, because the POC is your volume-based resistance, which is more important than the golden pocket. Or I would say it would be a better confirmation if we busted through here, hit the POC, and then started to lose the golden pocket. That would give you more confidence in the short as well, because then you could enter the short as soon as you start to lose the golden pocket, and you know you have a valid stop loss calculated above that POC, and then you could target yesterday's lows, and then eventually your overall target would be like that $60,000, and that would give you a really nice risk to reward ratio and better confirmation that the trade is actually going to play out. The next area I would look for a short, if we do break above the golden pocket and POC, we do have our 786 that is right near the value area high of this local range. And we also have that daily level right on top of the 786, pretty much at $64,000. It's going to be 64 to about 64.1, let's say. Absolutely, Rainer Rossi. And thank you for the comment, my man. Wife got me a banh mi for lunch, so winning pretty hard today. Awesome, Time Attack. That's great, man. 77 watching, 32 likes. Yeah, guys, let's pump up those likes. Please, if you get any sort of insight into the market, if you learned anything today, please hit the like button. Or if you're just enjoying your time here streaming together, please do hit the like button for me. All right, and thank you, R Pink, for posting all those links in the chat, man. I really do appreciate when you do that for me. All right, not quicker. Much love, man. Yep, Jason took a lot of trades to buy the bottom to the exact doll hair and short the exact top, but kept the losses really small. So when that winning finally filled, cha-ching. Yeah, dude, Jason's probably one of the best knife catching, rocket catching snipers I've ever seen. Like, he is so good at just executing that absolute low. You know, I'm still amazed. You know, I've been trading with Jason since 2018. I'm still amazed sometimes at how he just catches those. It's like, it's wild. And he always seems to be in the exact top and the exact bottom. Always. It's sometimes right, just popping in to taking some time off. Thank you, as always, for the education and nuggets. Absolutely, sometimes right. Thank you for being here, and thank you for the kind words. Appreciate you, my man. And I hope you do enjoy your weekend and your time off. Where would you suggest to trade since the new rules in Europe? Man, honestly, Shrimplet TV, I honestly couldn't answer that for you. Like, you could probably use a DEX, like Jason has Antarctic, which is a DEX that he's actually part of the creator, part founding team there, where you hook your wallet up to it, your cold wallet or your hot wallet up to it, and you trade using a DEX. Or you could just go with any exchange that doesn't require KYC. Now, you might have to use a VPN, though, to switch you out of Europe. Like, I don't know there with that. Unfortunately, I'm blessed not to be in Europe right now with those rules. So, but I can reach out to BYDFI. I don't know if BYDFI is going to, with the new rules that are coming in, the new laws in Europe, but they are a non-KYC exchange. So you don't have to KYC, and it doesn't require a VPN, but you can use a VPN and still get on BYDFI. Okay, 5-day green dot on Market Cipher. Okay, yes. So guys, we are confirming. Let me go to the 2-day time frame as well. 2-day time frame as we were coming down to hit the anchored VWAP. This was the key, guys. At 60,000, we front ran the anchored VWAP. At 59,000, we front ran the anchored VWAP. At 58,000, we front ran the anchored VWAP. We finally hit our anchored VWAP from the bear market lows. Look at this. This is so important. And I'll tell you why these anchored VWAPs are so important. I mean, look at the last time we hit the anchored VWAP, huge explosion to the upside, right? That was pretty much the only time in this bull market. But let's go to Ethereum real quick. And I want to show you guys how important anchored VWAPs are. Because when we look at Ethereum, and we were looking at this push up from 1400 to new all-time highs. every time we came down and hit the anchored VWAP, we bounced, we made new highs. Hit the anchored VWAP, bounce, make new highs. We see a big retracement here. We hit the anchored VWAP. Yes, we wicked past it a little bit, but we wicked past it to hit a golden pocket. And then because it holds, you make new highs and you come up to new all-time highs. Also, remember, it's a volume-based trend support. So the second you start to lose it, you backtest it, you backtest it. If it doesn't hold, if you can't flip it back into support, if it turns into resistance, you expect the big dump. So we see these anchored VWAPs are so important. Remember, it's a volume-based trend support. Volume is king, volume and liquidity. So, you know, when it holds a support, you expect the rally to continue. When it flips into resistance, the dump occurs. And we finally, for the first time, hit the bear market lows anchored VWAP on Bitcoin. It is super important that we hit that anchored VWAP finally. And now because we've hit that anchored VWAP with daily bull divs, weekly bull divs on the chart, we could see a big rally from here. We also finished our Elliott wave count to the downside. Let's see, 2-day time frame, bull divs on the chart, bull divs on the chart, money flow, bull divs on the chart here. If we go to our, let's see here, I don't have the 5-day on here, but add here, we'll do days, 5-day here. Yeah, we do have actually some nice bull divs on the 5-day. The one concerning thing that I do not like is look at your money flow on the 5-day. It's starting to roll over again on Market Cipher. Now, on NAMI, you can see we have the regional bull divs and the local bull divs on the 5-day. And do we have money flow bull divs? We have, it's more of equal lows on money flow, but money flow is curving to the upside. So that is actually nice to see as well. And once again, the weekly, guys, the weekly on Market Cipher is starting to confirm a bull div. NAMI does not, and that is a bit concerning to me that NAMI does not have it as well. I would like to see that ultimate prime setup. So I'll show you guys, because I use Market Cipher and NAMI in conjunction, there is a trade setup, a confirmation trade setup that for me plays out. I have not done the hard statistics on this, but I promise you guys it plays out like at least 75% of the time. And that is when Market Cipher has momentum bull divs. On the momentum waves, we have bull divs, and the money flow is bottoming out and starting to curve to the upside. And then on NAMI, because NAMI is much quicker to confirm, on NAMI, while Market Cipher is showing this, on NAMI, you see multiple drives of bull div, more regionally, and you see the local bull div, and then you see the money flow bull div, because NAMI's quicker. So when you have this set up together, where NAMI has the money flow bull div, regional bull div, local bull div, and Market Cipher has the bull div on momentum and the money flow bottoming out, whether that's on the hourly time frame, the daily time frame, the 5-minute time frame, the 15-minute time frame, when I see this double confirmation like this, the trade usually plays out, at least for a TP1, right? And already, guys, that's why I was looking to long 57.9, where our first TP was at 63.5, and we hit that TP, and my stop loss is now at break even. So in some ways, that trade has already played out, and that was what, a $7,000 move to the upside? I mean, guys, that's a really good move to the upside already. Almost $7,000 move to the upside. All right, 15-minute, let's go here. Man, I guess, you know, we might see a little bit of a rejection here. I think we just probably rejected our very local golden pocket. If we pull a golden pocket from this high to this low, yeah, you just rejected your very local golden pocket. So because we rejected that local golden pocket, we're probably going to make another new low, but we're looking for something like this, a 3-wave corrective move, kind of like that bull flag, right? In a channel here, and then we might come up. So we can do this. Let's go to the 5-minute chart, and you can see we can pull a channel. Because we rejected this golden pocket, you pull a channel from the highs to your golden pocket rejection lower high down to those lows. This is your bull flag, right? And so what we're looking for is if we come down and hit the bottom of the channel again, or we can also take our trend-based Fibonacci extinction. We'll go from the highs to the lows. Which one's the high? Let's see, that's there. And you could look to maybe come down. You know, this might chop a little bit in here. So you might get something like that. You kind of have a little bit, well, yeah. I mean, I would be watching the bottom of this channel. I am now on the 5 minute. I would be watching for a new local low below the low we just made. And that is, let's see here. That is going to be coming in at 63.1. So maybe a move down to like 62.98, like 63,000, maybe another $100 lower. Now, if we start to break this channel down, then yeah, we could see us come down all the way back down to your VWAP, which is your range POC of your small range that's been developing over the past 24 hours. And well, first let me clean all this crap up. So, with this impulse from 57.7, you can see how it was very aggressive to the upside till about right here. And then right here is where we start going sideways. And that's why we're looking at this sideways range, because you have your aggressive momentum and then you start getting your buying exhaustion up here, sideways buying exhaustion. So that range is what we want to analyze. And you can see how after bouncing from our channel midline, we flipped back up into the volume profile. We back tested. And so now we're looking to come up to hit that POC above us. But if we start to roll over here right now, we can look at the POC below us, which is also, it's the POC of the small range. I'm sorry, this POC is of a larger range at a 63.6. But your VWAP and your POC of this local range, which pretty much just goes back to Saturday, the weekend. So this is the range of this week. All right. Win 100K. Honestly, probably, Theo, the Rob side, probably not for a bit. Honestly, like, we're in accumulation here, and accumulation does take time. Oh, what does the CVD look like? Good question, Rpink. Good question. All right, are we seeing local bearish divergences here? No, I mean, honestly, the CVD doesn't, it looks pretty neutral right now. We are making higher highs in the price action. And I guess, let's see here. Let's throw a vertical line on this. So what we're looking for with CVD divergences, let's look at a high, just this high from like last night in my case. You can see your CVD is right here. So we're pretty much flat. We're at the same area as far as CVD goes. But our open interest has been decreasing. So we're just seeing positions close out inside of this consolidation here. If you even wanted to, you could zoom in on the 5 minute and you could pull a volume profile for this little range. And what we're seeing is a breakout and a back test of that range. And then you can continue up. So let me go on to the trading view chart and we'll look at that 5 minute chart. And we could just look at this little range in here from last night. And I'll hide some of these other ranges so that we don't get confused here. But you can see this was your aggressive momentum, right? Your aggressive momentum up, and this is your sideways. So we can pretty much just do the same thing we were looking at on a smaller time frame, right? Yeah, so see, you broke out of the range. If we come back down to back test it, which guess what, guys, that $63,000 is also where that 1-to-1 in the bottom of that channel is. So if I pull that 5 minute channel again, you can see that coming down here, you can maybe look for a scalp long from 63 up to 63.6. Yeah, that's a super small move, but what you would be looking for is, well, first you would want to come down and start to see the bounce, and then you would probably long a little bit late, right? You'd want to wait for it to bounce a little bit. Your stop would go right below that low, and I would be targeting the POC. That's still a good scalp. Even though it's only a $600 move, it's about your risk to reward ratio. You could take 50% out as soon as you take out that high from earlier today. Or you could close it as soon as you take out that high from earlier today. The market is always going, it'll be here when you're ready. Yep. Where would you put the stop loss? if it makes it to the 786. So I think, our Pink, you're saying that 786 that's up at about 63.9-ish. I would, let's see here. Let's zoom back out to the hourly time frame. And then I will get rid of this larger volume profile and we'll look at our local one. So of the past month, right? Or 5 weeks, this local range here. Man, yeah. It's a bit tough. And we can also look at this week, you know, that's where that value area high is. So what I would be looking for personally, because you have the larger value area high just above us, but if you break the 786, you're likely to take out that range high for Monday, So if I was to get in a short there, what I would wait for personally is, say we come up, you know, we flip this to support, kind of chop around here, and then we kind of work our way up into this next box. I would want to see a little bit of a push above the 786 to hit that value area high. And then as soon as you start to lose the 786, then I would start to look for the short. So I would wait until we actually lose it, right? So you could do this. You would enter when you started to lose that 786. My stop would go above that value area high of the past week. And then I would be targeting coming down, you know, and you could, after that, you could pull, let me get rid of this. After that, you could pull your golden pocket, right? You could go from the lows to wherever that high is going to be. And you could look at that golden pocket because it's going to be the value area low of the week. So you know, a TP, I would probably take a TP1 of 25% there. And then I would leave the rest to run to take out Monday's lows. And then honestly, to come down to 60K. But the 60K is the main support level. And I do think if we reject on a lower high anywhere within these two purple boxes, we are going to come down to 60K. So yeah, that's what I would do personally. And our Pink, I don't know if you're in the Telegram. I will try to keep you guys updated on if I enter a trade within this purple box or this purple box here. But this is all speculation, right? I am still having a bias because this is looking like a 3-wave corrective move here. I still do think we could take out this high and come up to 65.7, the top of the channel, which also happens to be that weekly and naked weekly. We also have a 786 at 63.2, I think it was, or 65.2. If we pull that, let me just go into the 4-hour. And if we take our Fibonacci retracement from the highs to the lows, we turn on that 786. Yeah, you can see that 786 is coming to 65.221. And it would be the same kind of thing here, right? You could, well, you have an SFP in here, so I would probably trade the SFP, right? So in this scenario, if we come up, you have that SFP at 65.5. I also do have an alert set on that already, guys. I have my alert set. I think it's one of these. Let me get rid of this here. I have an alert set on Monday's low. So if we SFP that, I'll let you guys know, and I might be interested in along from there. I have an SFP on the range highs, and we have an SFP right there at 65.3, right? So if we come up in one last push up here, we SFP, hit the naked weekly point of control, and then start to lose the SFP, I'll look to short. And it would be the same scenario, right? You're shorting on the SFP on losing it, so you're probably going to be underneath it just a little bit. Your stop is going to be above wherever that wick high is. And then in this case, I would be targeting, because you made a higher high here, I would be targeting, you know, maybe these lows in here and the midline again. You'd be targeting that channel midline again, because you would be rejecting from the top of the channel. And if you reject the top of the channel, there is a possibility of moving down to the midline before breaking out. And it would give you, once again, that left shoulder, head, right shoulder, breakout. Okay, there we go. All right. Yeah, Alex, thank you for the comment, man. Great analysis, Divine. Love how you really use every strategy. Yeah, thank you, Alex. You know, I kind of Frankensteined it, right? Taking a bunch of different pieces of different strategies and combined it to make it work for me. I think volume profiles are so important, but also we know Fibonacci golden pockets are so important. I love pitchforks, especially on high time frames. Man, you know, the reason why I was looking for longs down here, we had two macro pitchforks that were telling us with bull divs, you know, your bear market pitchfork right at the bottom, touching with bull divs, your multi-cycle pitchfork. Where was that one? Not that one. Oh, sorry. In the macro folder. Both of them. High time frame support levels. Finally hit right here. Okay. Well, 44% of the time. Okay. Not sure. Yeah, Shrimplet. Absolutely, man. Get a Palu ID. Yeah, you can do a Palu ID as well. That is, you know, I had one. I think I let it expire, but I had one. Can I take a look at gold? Yes, we can look at gold here. Gold, not USD. Well, we did get that rejection from that box of resistance up there. The thing with gold here is from the lows, yes, you were at your value area low. So we have two ranges on gold. We have our big kind of upper range, and I'm sorry for how disgusting and messy this chart looks. Let me just hide some of this. Okay, I'll leave those up there. We have, you know, that 4,700 is very important there. But you can see this upper range, right? It's kind of after this huge straight up move. You have a corrective and then another one, but this is now forming kind of this topping zone in here. So we can look at that larger upper zone, and then you can look at, because all of this is clearly impulsive, right? All the way up to the highs, the all-time high. Clearly impulsive price action. So after the impulse finishes, you can pull a fixed range volume profile. Remember, it's in the name of the tool, fixed range volume profile. So you're trying to find the important volume support and resistance levels within a range. And an impulse is not a range. An impulse is an impulse. So oftentimes after the impulse finishes, then you can pull a volume profile and look at that volume profile, right? And sometimes it's a sideways and down range, like a channel, but it's still a corrective move, a corrective range. But you can see of our larger range, we came down to the value area low. We bounced from the value area low. And I believe we had bull divs on the daily. Let me go to the daily chart. Yeah, we had those bull divs. You can see lower lows in here, higher lows, bull divs confirmed on both NAMI and Market Cipher, and it gave us a bit of a push up to backtest your channel. And you can see on gold, let me just hide this smaller range real quick. We're chopping sideways and down in this channel. We were holding the midline, lost the midline, flipped it to resistance, and then now we're coming up to the midline again and rejecting. So if we reject from this midline again, you might expect a move down to grab your liquidity at 38.86, or potentially even to come down to the bottom of the channel and that naked monthly point of control at 36.45. But as far as gold goes, I mean, the daily bull divs did give us a nice push to the upside, but I don't like how we're rejecting. You see the rejection that we had on Monday? It was rejecting also the bearish backtest of our pitchfork. And our pitchfork, I know this is really confusing to look at with all these naked monthlies on the chart, and just hide some of this. You can see we rejected the upper band of the pitchfork. We had a big dump. We rejected again the lower limit of that band. Yes, you wicked into it for a bit, but so pretty much we confirmed a rejection of the upper band of the pitchfork. We confirmed a rejection in here. After rejecting the top, you move down, you break market structure bullishly by taking out some lows. Then you make a lower high, you reject the lower limit of that pitchfork band. And then after rejecting the lower limit of the pitchfork band here, you dump aggressively straight to the midline. But look at the bounce that we saw at the midline. You get a nice bounce, you move you get a nice move up from there. And I remember I longed that. And that was a golden pocket, a lower high golden pocket. If you pull your golden pocket in here, And you have to put that on log scale because it's more than a 30% dump. Remember, we're using the log chart. Sorry, it was from this lower high, this one right here. And you can see that we hit that golden pocket perfectly, right? So I longed at, I think it was 4106. I longed at 4106, and then I took profit at this golden pocket. But we rejected that lower high golden pocket. But this is what's concerning to me. Sorry, I got a little bit off track there. What's concerning to me is that that midline held you as support here, but you made a lower high, and then you lost the midline. This past couple of weeks, you lost the midline, and we back tested it on Monday bearishly, and we're seeing a rejection from that back test. So that means we could continue down at least to take out 38.86. Let's zoom in onto like the 2-hour time frame, and we can look at pretty much all the price action like this sideways range in here. You can see you have an aggressive dump here, and then you start kind of chopping sideways. So I would go from that low over. Yeah, and you can see that was also your value area high. You rejected your value area high. You're losing the POC. Right now, we're back testing the POC. So depending on what happens with this back test, if you start to reject, you would expect probably to come down at least to value area low, but you're probably going to come take out these lows in here. Let's pull a Fibonacci golden pocket. All right, so you already bounced from your golden pocket. Let me make sure that's not on log scale because that's not 100. Yeah, there we go. You bounced from your golden pocket. This move up. Let's see, 1, 2, 3, 4, maybe 5. I mean, like, you have a lot of choppy overlap. So if this is going to be a 1, 2, 1, 2, you have your pushing a 3 here. You have a 4, 5, 4, 5. So there is a valid count in here, or you could look at this as some sort of contracting diagonal in here as an impulse. And if that's an impulse, then you want to see a move down to golden pocket, and then you want to make new highs. So you probably want to come up to that naked monthly at like 30, 33.29-ish. You'd want to come up into this purple box at the very least. What we're seeing though, you remember, trade the range that's in front of you, and we're in this small range. We rejected around the value area high, and we lost the POC. And look at what happened when we lost the POC. You lost it, you back tested it, and on that bearish back test, you get a big drop to the golden pocket. But your golden pocket is holding. Now, from the lows on Wednesday, we can look at this as a 3-wave corrective move to back test the POC and continue pushing down. That's your bearish scenario, or a bullish scenario as you're looking at this being a 1, 2, and this 3 is probably going to push you all the way up, probably to take out this liquidity here and hit the midline, and then you're going to get a 4, and then you're going to probably actually come up and take out the highs for Monday. And then you could even be looking at an A, B, C coming up to 43. But you do have kind of that proverbial bottom reversal pattern, right? You have this left shoulder in here. All of this is kind of your right shoulder, and then this, head, and then this would be your right shoulder. So if you long the golden pocket at 4,000, I would stay in that long position. But you have to be careful of the rejection where we're at right now. Now, even at this lower, you know, you have tap 1, tap 2, tap 3 in here, but you can see even in here, you get the smaller 1, 2, 3, right? And that's exactly what we're looking at on Bitcoin, by the way. Sorry, guys, I just want to show you that on Bitcoin real quick, and then we can come back to gold. But on Bitcoin, we're looking at, on the daily time frame, 2 possible accumulations, right? You have your smaller range in here, tap 1, tap 2, and then if we're going to pull back down, tap 3, and this could come up first and then pull back down. It still would work, right? That is that smaller, but you're looking at a bigger tap 1, all of this being a tap 2, you know, maybe break up to 77, then come all the way back down, and that would be your tap 3. So if we go back to gold, you saw that on the smaller time frames, right? At gold, tap 1, all of this is a lower term, like head and shoulders or accumulation, and then you get your right shoulder or tap 3. But gold needs to, if gold wants to stay bullish, we need to start breaking above our channel midline and your pitchfork midline. So pretty much this purple box of resistance, you want to start to break above it. If we break above it even if we reject from this naked monthly point of control, it could be a rejection just to back test the pitchfork midline, and then you could continue. And quite honestly, on higher time frames, we're on the 2 hour right now, but on the daily time frame, we have to see a bullish market structure break, right? Because all of this, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Could we put in another lower low? So the key we got to break, well, Monday, you could even breaking Monday's high would be a market structure break. But the very key market structure break, in order to see much larger continuation to the upside, is to break 43.82, that high at 43.82. I heard that OKX has the best user experience in the EU, but I refuse to trade with low liquidity USDC pairs. Okay. Well, thank you for the input on that, Chichon. Short from 63,338. No TP. So you're in a short right now. I mean, you did hit and reject from the golden pocket, so I get that. I personally would not take that yet, and I think that, look at, we're starting to kind of curve up here. I'm waiting for a little bit higher. I'm waiting for the short from around 63.6, or, you know, the next short is up in this zone, 64 to 63,950-ish. And let's see if we can get another drive of bear div on the 15-minute or 12-minute. You can't, Alex, you can copy my chart. If you're in the Telegram, I have my charts pinned. Now you cannot change stuff on the chart. I think it's read only, but in my Telegram community, you guys can check my live interactive charts. You can click on it, you can copy it into your trading view, and you can come into the object tree, you can turn levels on and off. I believe, well, actually, I don't know if you can turn levels on and off. I'm sorry about that, but generally, if I have a box there, it has confluence, right? Now, today, I have some smaller, lower boxes here because we're kind of focused in on the very local price action. But if I don't have a box there, there might be a resistance, you know, like, for instance, right here at 64,350, there's a value area high of our month-long range. But I'm not really looking to, or excuse me, that's the value area low of our 5-month-long range. But I'm not really looking to take a short from there. So I'm not looking to execute a trade from there. So that's why, like, there's no box there, right? But if there's a box there, then I'm interested in taking the short if I see the confirmations on my chart. And remember, I'm a confirmation-based trader. So as we're coming up to this box and hitting the POC, I would want to see bear divs between these highs in here. So you would come in and you would look for those bear divs. You would look for the bear divs in here. But once again, guys, I am telling you I'm interested in shorts from these boxes, but I'm going to be very careful with it because now that we've seen that this is likely to be a 3-wave corrective move, the overall bias is to take out Monday's high. So this could keep going like this, small rejection, back down, small rejection, back down, and then continue up, right? You could just keep chopping like in an upward channel to come up to 65.2, 65.7. So we got to be careful with those shorts there. Yeah, we're trying to flip a POC into support. Let me go to the Bybit chart. Bybit's POC, you can see, actually has been flipped into support earlier today. So this is of the month-long range or 5-week-long range. Let me pull it all the way. And look at what we did. So yesterday, you lost it. You back tested it. You still made a higher low, but today we broke above it. Support, support. So now we're flipping the POC on Bybit to support. You could expect to work your way up to the value area high. Now the value area high on Bybit is higher than Coinbase's. We can also pull on Bybit that small week-long range going from Saturday, June 4th over. I would be looking at that value area high, 63.9. And remember, that's kind of where your 786 Fibonacci is. So I guess, yeah, Coinbase, it's a little bit different. You can see on Coinbase, this week-long range, the value area high is above the 786. On Bybit, it's just below the 786. So I guess if we were pulling that box on Bybit, we would make it a little bit bigger from 64 to 63,850. And it's not 64.1, it's like 64 64063-ish, 6407. But I like, yeah, so we have it pretty much at a good spot. I like the Coinbase volume levels better. Now, sometimes Bybit's chart is respected. Bybit's volume levels are respected more than Coinbase, but I've been going back and forth on the charts for years, even including Binance's chart, by the way. And to me, Coinbase volume levels are just respected more. Bybit's or Binance's value area high is even higher. Well, it's about the same as Coinbase. 64,078. 64,078, I guess. Yeah, so I would look at that 64,078 to 63,9-ish, 950-ish. All right. Please check near. Yes, we can check near as well. Well, we're back testing a value area low. So let me get rid of this smaller range. We're looking at this sideways range on near. You see, once again, you have that aggressive dump to the downside. And after the aggressive dump, we had a 3-wave corrective move up to a lower high golden pocket. We rejected the lower high golden pocket. The second you rejected this lower high golden pocket on a 3-wave move, you expected to make new lows. By the way, we were looking, even when we hit here, remember that was like 2 weeks ago, I told you guys, I want to see one more move down to actually hit the naked daily point of control at 174.5. And I told you guys I was going to long it if we SFP'd that and pushed up. Now, I did long that, but I took profit. I closed it out because I didn't want to babysit it. So I closed it out when we hit the POC. But on near, we're bouncing from a support level, which was a more macro golden pocket. You can see this was our golden pocket, 176 to 171. We had some bull divs as we were coming down here on higher time frames. 6 hour, you can see lower lows, higher lows. Bull divs were in here. If we go to the daily, Nami was showing some bull divs as we were coming there. Money flow was bottoming out, curving to the upside. We're about to cross into the green on near. But what we want to pay attention to on near is after this big aggressive dump, we're starting to chop sideways and down, right? In that channel. Could we reject and continue to make new lows? Yes, we could. We could still continue to, and actually, you know, we had an impulse, 1, 2, 3, 4, 5. After an impulse, you're looking for a 3-wave corrective move to golden pocket, right? A, B, C, and then we could continue up. But the macro golden pocket is at 138. And so you might see this be something like this with a bounce up to here and then a move down to 138 before seeing larger continuation to the upside. You want to focus on this small range. After the big aggressive dump, you want this big aggressive dump, focus on this small range. So let's zoom in and let's focus on that range. You can see I have my volume profile pulled for that range. And now we will just, what happened here? Well, we were able to get back inside the volume profile. We moved up to the POC, but you can see we're seeing sell-offs at the POC. I do not like how we didn't SFP the highs. We were so close to SFPing, so now we have a double top up here. From the high on Monday, what's important to analyze is whether this is going to be a 3-wave corrective move down and then continuation to take out that double top, or if this is going to be an impulse down, a 1, 2, 3, 4, and then if we make another new low below Wednesday's lows, that's a bad sign. We can also pull our Fibonacci golden pocket from the highs of wave 3 to the lows of wave 3. If we hit the golden pocket, it invalidates a wave 4. Now, so far we haven't hit it. That is going to be coming in at, what is that, 198.6. If you hit 198.6, then you could say that this is far more likely to be a finished 3-wave move down, and we probably are going to take out the double top at 211.6. But if we roll over at our wave 4 targets, so I'll pull that same Fibonacci from the highs of 3 to the lows of 3. If we hit our wave 4 target, which that's where we're coming into right now, between the 382 and the 0.5. So if we roll over here inside of this zone, then you would expect to come down and take out Wednesday's lows. And that's not a good sign. That is not a good sign at all. And that means you're probably going to make new lows overall within this range. You're probably going to make new lows below that guy. But let's pull our golden pocket from that low to our high. You are seeing a bounce from the golden pocket and value area low on Wednesday. So the important thing right now is, can we break above? Can we hit that 198.6? If we can hit 198.6, the bulls are back in town. And we probably are going to push up to take out 211.6. We can also look at naked dailies in here because we're probably going to have some naked dailies. So you do have a naked daily right around the golden pocket. A little bit higher. We can even just look at this small upper range because you can see here, let me get rid of that. We have a lower range. You broke out of it. You started to form another range up here. And now we're starting to dump back into this lower range. So what we can actually do is just pull a volume profile from that low, from like right in here, sideways. And that volume profile, yeah, your value area high is going to be right there. So here's the thing. I talked about the double 1-2 impulses earlier in the stream. There is still a probability, but it's low probability, that this could be a wave 1, wave 2, secondary wave 1, secondary wave 2, and then you waterfall, right? And then you see your 4-5s come in. But your secondary 1 and your secondary 2 would be so much bigger in time and price than your primary 1-2. What is more likely is that this was a confirmed 3-wave move down. This is going to be a wave 1 up to this golden pocket value area high. You're probably going to get a wave 2 down to a golden pocket, and then you're going to get that 3 that explodes to take both of these highs, maybe a 4 and then a 5 coming up into this zone of resistance at 221. That is a fresh weekly up there at 221.9. And you have your previous range value area low up there. You have your current range value area high up there. And if you bounce from the value area low and you break above the POC, you expect to move up to value area high. So to me, this scenario that I just laid out, 3-wave corrective move, go up, I think it's a little bit more likely than seeing a double 1-2 impulse with a 1-2, 1-2, and then down. Actually, we're not even there yet. Right now, we're still working on whether this is going to be an impulse, 1, 2, 3, 4, 5, or if it's going to be a corrective move. So you just, once again, want to pull from the highs of wave 3 to the lows of wave 3, pull your wave 4 targets, and we're in that zone. Okay? So we could reject here. If we do reject here, you are going to take out, no, I shouldn't say you are highly likely to take out Wednesday's lows and probably come down to the value area low of this smaller range, 180.4-ish, 180.4, 180.2. That's probably going to be where your 786 is as well. Yeah. So that's what I would expect. It's either going to be this 1, 2, 3, 4, 5. You might get a small move up from here, but I would expect continuation after. That could still give you a scalp long though. Or we're not going to reject from here and we're going to continue pushing up. Probably up to value area high, small rejection at golden pocket. Boom, 3, 4, 5. I hope that makes sense, guys. I know that Elliott Waves, there's a lot of different scenarios and you have to kind of map out all of them, but you want to go with the more probable scenario first. And right now we're determining whether this is a corrective move or if it's going to turn into an impulse. Okay, let me you guys ever get into that zen feeling when trading seems easy to you and the market moving in each direction? Everything is clear, you're locked in. Yeah, dude, time attack, I know what you mean with that. You get into that flow state. Yes, I do feel like I get into that flow state at times, and it's incredible, right? It's awesome, and I'm just grateful for the knowledge and experience, and you guys all should be happy and proud of yourselves for being here and being willing to learn a new skill, because there's a steep learning curve to trading, and that's why 90% of people fail. But if you can stick with it and if you can get the risk management and trading psychology down, it's life changing for you, right? You can change your wealth, and it might take more time than you want, but you all should be proud that you're sticking in it, learning, spending hours out of your day to learn TA, to learn, to study, look at the charts. I mean, you could be doing a lot worse things with your life, right? So you got to recognize that in yourself as well, and kind of be proud, and not in an egotistical way, but be proud that you're willing to, have the grit to learn a new skill, have the patience, the discipline. Dr. X, we'll look at silver. Let me get a drink here real quick, guys. All right, so on silver, we have our bigger descending channel, this big pink channel, right? You saw the very aggressive move down, and now we're chopping within this channel, right? The midline is now going to be acting as resistance, and we got these purple boxes up around the midline. But what we're seeing here is we did bounce from that $58 support level. We chopped around a little bit, but it was our 382. It was a naked weekly point of control, a naked monthly point of control, a daily level. Overall, on the higher time frames, let me just zoom out to the weekly. So this is what's important to understand about silver on the weekly time frame. And I know this chart's messy, so I'm sorry. But from our lows in March of 2020, we are clearly in an impulse, right? This was clearly a wave one of an impulse. We saw our corrective move down in a wave two, and all of this was a wave three that came right up to the 2-to-1 Fibonacci extinction. And it was also your super bullish original pitchfork. You came right up to that lower band of the pitchfork. By the way, at 117, it was happening during one of Jason's live streams, and I was telling everyone, if you're in a gold long, take profit. Please take some profit, and please, not financial advice, of course, but I'm looking for shorts if we lose 117, because we busted up to 120. And from that area, on MEXC, I did take a short at 117. Now, I took profit way, way too early on it, and I wish I didn't, because I honestly, the two main levels. So if you're looking at this as an impulse, a 1, 2, 3, now we're in a fourth wave pullback. The pullback is between the 382, which is at 58, and I know this is hard to read, so I'm sorry about that. 382 at 58 to the 0.5 at 47, 46, 47, right? So those are your two main macro support levels. It was 58 and 46, 47. And then if you hit 36, it invalidates the impulse. Now let's zoom in onto the daily. And I know this is a very horribly messy chart. I'm sorry about that, guys. We will clean that up here. Let me just delete that. So this move here clearly is a three-wave corrective move. From the bottom of the channel to the top of the channel, you saw a three-wave corrective move where you flipped the midline to support and you worked your way up to the top of the channel. But the second we broke market structure bearishly by taking out that low, hold on, right? The second we took out this low at 71.23, it was very likely that we were going to take out the low at 61, because it pretty much confirmed that this was a three-wave corrective move, because we broke market structure bearishly. So we broke market structure bearishly. We did end up moving down. There is a way to count a valid impulse here. 1, running flat in a 2, 3, 4, 5. You got your 5-wave move down. So because this was a 3-wave corrective move up and a 5-wave move down, we can expect that we might see another 3-wave corrective move up and more continuation down. or we're going to start to form a range around that $58 support level, a sideways range in here, and then hopefully break, up in here. If we zoom in onto the 2-hour chart, we were in this corrective channel. You can see this choppy channel. And what we were looking for at last week is we had some, in the bullish case, we were looking for 1, 2, 1, 2, 1, 2, and then you wanted to see this explode in a 3 and break out of the channel and probably come up all the way to the midline before seeing some 4 5s. Guys, give me just a second here. Hold on. I'm going to mute this for 10 seconds, guys. I'll be right back in 10 seconds. All right, there we go. Sorry about that, guys. But we didn't see an impulse in here. We failed, right? Choppiness failed, and we dropped back down. Let me see if we broke market structure. Let's see. Did we take this out? So we haven't broke like main market structure, right? We've broken some of these lower highs in here, but we are breaking the channel down, and you can see we broke it down with some volume. I can actually get rid of these dailies. I'll just hide all this stuff now. It's been hit, guys. They're not fresh anymore. So all of this is not fresh anymore, but your 382 is still there. But what we did is we broke the channel down, and now we're back testing the channel. So if we reject, which it looks like we're starting to reject here, you would expect continuation to take out your channel lows. Now the markets are closed on silver. So next week, when we start to trade next week on silver, watch for this. If this confirms and loses the VWAP, then you're likely to take out the channel lows. And you're probably going to come to the bottom of the bigger channel. So 54 to 53 and a half thousand. Not 54 to 53 and a half. Hold on, let's do that. Yeah, and I would say even this small push up, you could look at this, is this a 1, 2, 3, 4, 5? You do have overlap. So you can have overlap in a contracting diagonal. It's still a motive way, but if you see here, yeah, you touched it. So the only way for this to be bullish from the lows at 57, the only way for this to be bullish is if it's a contracting diagonal. But it's a very low probability, and you're probably gonna, even if it's a contracting diagonal, right? If this is a 1, 2, 3, 4, 5 contracting diagonal, when you retrace on a contracting diagonal, you usually see a deep retrace to like the 786 golden pocket or even the 886. So at the very least, and because we're bearishly backtesting the channel after breaking down, I would expect to move down at least to probably your 786. Let's pull that. 57.9-ish. And then you might see a bounce there. A in a contracting diagonal, B, and then another C wave up to the golden pocket. So we could pull a golden pocket from the highs to the lows. Put on your golden pocket. Yeah, and then it would be another back test of the channel. But after that back test, if this is an A, B, C, you would expect to finally come down and take out this low. We'll keep an eye on it. Let's do this. I'll set an alert. We'll put both of them on, and I'll set an alert around the golden pocket. 618. Okay, there we go. But and right now, I would say you are starting to see a rejection, but it's not fully confirmed yet, right? Because you can see you have a few hours of chop in here. You tried to break above it actually, and now you're starting to lose it. But you could see something like this, right? We can actually go to the XAG USDT chart. That's not the right channel. Let's see here. Yeah, all right. So those two into that. All right. So you can see rejected the top of the channel. Boom. Now on this one, XAG hasn't actually back tested it yet. But you are losing the channel. You did reject from the top of the channel. Starting to dump. And this is just going to be so low volume in here, guys. Okay, let me check this chat here. Sudeep, much love to you. Welcome in. Yeah, market is still open. Yeah, I'm sorry. Okay, well, either way, it's getting close to close. It's getting close to a close. God, my time this week has been so messed up. We're all trading to get wife changing money. Yeah, maybe so, huh? Don't let your wife hear that, Time Attack. She just bought you that nice lunch. We can look at hype. Yeah, let's look at hype here. Hype. So on hype, we did come up to our resistance, that naked monthly point of control in that 786 zone. We did bounce from our support at 59. And I would just be looking at this sideways range, right? We have a sideways range in here. This was, I believe this 59, there was a naked weekly point of control in there that we bounced from. Yeah, you can see that naked weekly point of control in there that we bounced from. And I did long that, but I took profit at the value area high because I thought there was a chance we could reject that value area high. Now, let's turn this off. So you can see our volume profile that's important. We're at the top of a big pump, right? Starting to consolidate. This could be distribution, guys. We have to be careful because this could be like that topping reversal pattern. A tap 1 in here, tap 2 in here, and all of this could be a tap 3 where then you really break this sucker down. Or at least break down to take out your $52 lows, 52.5 lows. Dang it, I wanted to short that naked monthly. I took profit at the naked monthly as well. I closed out the rest of the long position at that naked monthly, but I did not short it. And you can see as we were coming up there, higher high, higher high, higher high, extreme bear divs, right? You just printed a hidden bear div. Like that was a really good short at that naked monthly point of control. And it made a lower high. So you have your, this though looks to be more of a 3-wave corrective move. There is a way to count a 5-wave move in here. 1, 2, 3, 4, and then 5. We can get rid of that channel now because it's used up and done with. And since we broke this channel, we were in bearish market structure here. We broke to bullish market structure. So now we can pull a bullish channel from the lows to that lower high. Actually, I'll bring it to this guy. And then we'll bring it up to those first highs. And that's our bullish channel now. So finding some resistance with bear divs at the top of the channel, rejecting from our naked monthly, and we've flipped the midline into resistance. You see, broke it down, back tested. So there is probability we're going to chop kind of sideways and down in here until we hit the bottom of the channel. And hopefully the bottom of the channel holds. If it doesn't, if you start to break it down, then you're likely to see lower high, lower low, probably to come down at least to the value area low, or even take out the lows. And in the bullish scenario, you wanted to see this being like a 1, 2, 1, 2, and this 3. You wanted this really to continue here. Could we have still said 1, 2, 1, 2, 3, 4, 5, 4, 5? You have your 2 1 2s, you have your 4 5s in here. So that is done. That could be a valid impulse. And now we want to see a 3-wave corrective move to the golden pocket. So let's pull a golden pocket from the lows of that impulse to the highs of the impulse. And you're looking at your golden pocket and you're looking at your 786. Now, when you break a channel down like this, you often will sweep the liquidity of the second pivot of that channel. And look at where the liquidity of the second pivot. Here's your main first pivot, second pivot, and then of course you have your channel highs. So if we break it down, I would actually not look at the golden pocket. I would look at the 786. And that's also where your volume support is, right? So the support below us would be this. And then we can look at some naked points of control to see if we have any naked weeklies or naked dailies in there. Now, this is interesting that we do have a naked weekly point of control at 64.68. I'll talk about that in just a second. Let me check our naked dailies. Yeah, okay, naked daily. So this changes things. Now our golden pocket is more important because we have volume support there as well. So I will now consider the golden pocket for a long because of a naked daily. And unfortunately, that naked weekly is kind of in no man's land. But here's what we could see. If this was a valid double 1-2 impulse, you come down, you might bounce from the naked weekly to back test the channel and then come down to the golden pocket. And that would give you your bull divs in between these two lows. Or you're gonna slice through that. You might even do something like that where you see a small rejection and then continue down here. And then you would be looking for bull divs between all of this. But you want that selling exhaustion, that choppy overlap selling exhaustion to come in there. But because there is a possible impulse in here, we have to consider higher lows. So for me, the only two areas would be the golden pocket and the naked daily point of control, and then your 786 and your point of control with the liquidity grab. And remember, liquidity is the most important thing. I'll set an alert on that SFP. If we get that SFP long, I'll take that. If we have confirmation, right? We can also set an alert on this naked daily point of control, and we can look if we have confirmation to enter a trade long if divs. So I will let you guys know in the Telegram, or if we're live when it happens, I'll let you guys know when it's live. Naked weekly, it is a nice high time frame volume support level, but I don't like how it's not in confluence with the golden pocket. So your naked daily in this case is better because you have confluence of a golden pocket. And then the only reason this is important because you have your range, your much larger range point of control, right at that 786, right where that liquidity is. Okay, so that's if we lose the channel. Now, we could still keep chopping in this channel, right? You come down, you bounce, and then you make another run up. And if you do bounce at the bottom of the channel, you're probably going to come for these highs because those highs are pretty much double highs, right? You have your high here, and then you have a high that's just below it. So I would expect that you're going to, and you're not going to come straight up like this, right? You're going to see some chop within this. So you're going to probably come down to the bottom, bounce, maybe reject from your value area high and your channel midline, and then break above it, flip it to support, and then work your way up. And then you would take out both those highs. And you would just keep chopping within the channel. But I also would be interested in taking a short from that SFP if we get that. And remember, the way to trade an SFP is you pierce above the level and then you start to lose it. Once you start to lose it, and I look at 5-minute candle closes or sometimes the 12-minute candle close, but once you pierce above it and start to lose it, say you get your 5-minute candle close, you put your stop below that wick, and then you just target, you target more liquidity or fibs. You can look at different targets for that short. But SFPs are very valid trades. Okay, guys, I'm really sorry, but I do got to get going. Been streaming for 2 hours here. Please do hit the like button on the way out. Also, guys, if you want to join the Telegram, remember, all you have to do is join BYDFI using my affiliate link in the description below. Deposit a minimum deposit of $100 once you've done that, you click the Telegram link, and in that Telegram verify channel, you type in /verify in your user ID, and it will get you into that Telegram. So thank you guys. I will be streaming tomorrow at 3 p.m. Eastern Standard Time. Please come join me tomorrow. We'll look at Bitcoin. We can look at some more of the altcoins. Let's see, what's Bitcoin up to? So, and remember with Bitcoin, just pay attention to those boxes. You know, the POC is just at 63.6. So if you start to, because we're not really seeing the rejection here right now. We're not really seeing the rejection from that golden pocket. So, and if we start to break the channel, which we might be right now, that 5-minute channel. Yeah, we're starting to break out of that channel. So watch for this. And remember, because this whole move here could be now a confirmed 3-wave corrective move, there is a chance of taking out Monday's highs. So you have to be careful on shorts from here or here. Okay, the main short to look at is from 65.7 to 65.2. You can pull your volume profile from last Saturday, this sideways corrective move, and follow this volume profile from Saturday. It's important. Just pull it from, you know, this kind of high, these triple highs in here, pull it sideways and look at that. Then you pull your Fibonacci from the highs to the lows. You'll get those same boxes of support and resistance. If you guys want, my chart is on the Telegram. It's pinned in the chat on my Telegram channel, and you guys can look at those levels in there as well. I will turn on that POC, and then you got the set. Just know that the bottom of the box is the 786, and the top of the box is your value area high. Yeah, thank you, Crypto Wander 5813. And thank you to all the mods. You guys, thank you so much for doing such a good job. Thank you guys all for being so supportive and just asking great questions. Like, I really do think we have a good community in here. So please do hit the like button on your